Chinese electric vehicles are being praised by car enthusiasts, journalists, and even the CEO of Ford. EVs made in China are gaining market share around the world, and BYD has become the largest electric vehicle maker, outselling Tesla. They're a common sight in China. Some 16.5 million electric and hybrid cars were sold in the country last year, and China exported more than 2.6 million new energy vehicles, double from 2024. BYD is leading the effort, delivering cars in Asia, Europe, and Latin America. Brazilian President Lula da Silva inaugurated BYD's factory in his country a few months ago, and Ethiopia, the second most populous nation in Africa, has banned the import of gas-powered cars, creating a big market for electric vehicles, mostly from China. BYD sold 2.26 million electric cars globally in 2025, outpacing for the first time Tesla, which had a drop in sales.
Tesla running into trouble on the back of a very aged product lineup, Elon Musk's unpopularity, and the fact that they can't really compete with BYD in terms of their very low costs and their very rapid innovation. But also they've got some great products, good quality products, excellent batteries, and they've really speeded up the ability to bring to market new cars.
The Chinese cars are turning heads and hearts. The automotive editor for Britain's The Independent wrote an article titled "Chinese Cars Are on the Rise, and yes, as an EV editor, I'd buy one." Here in the United States, a very similar one from the Wall Street Journal. "I test drove a Chinese EV. Now I don't want to buy American cars anymore." Even the CEO of Ford likes Chinese electric cars.
I don't like talking about the competition so much, but I drive the Xiaomi. We flew one from Shanghai to Chicago, and I've been driving it for 6 months now, and I don't want to give it up.
Mexico and Canada are importing Chinese vehicles, which are costly in the United States due to high tariffs. But some analysts and U.S. President Donald Trump say it's not a matter of if they will show up in the United States, but when.
Now, if they want to come in and build the plant and hire you and hire your friends and your neighbors, that's great. I love that. Let China come in.
So, how did China become the global leader when it comes to electric vehicles? Let's talk about that with Haoran Zhou. He is the founder of Telescope, a YouTube channel dedicated to the Chinese car market. Haoran Zhou, thanks so much for being with us. Great to have you.
Thank you for having me.
Right now, as I said last year, BYD outsold Tesla. The Chinese company has become the world's leading electric vehicle seller. Most Chinese companies that make electric vehicles have made enormous progress over the past few years. But when you look at a company like BYD, did it surprise you that it's now the leading car manufacturer and exporter in the world?
Not exactly, because yes, BYD has done a lot of things right, but it's also helped by a pretty lackluster product lineup from Tesla. I mean, Tesla has a pretty single-minded model lineup, which is one sedan and one SUV, effectively. They've just cancelled their higher-end Model S and Model X, I believe, last week. So in any case, no matter how good you are, even if you're Tesla, you cannot fight the rest of the world with two models. So yes, BYD has done a lot of things right, but the inaction or the single-mindedness of Tesla, partially driven by the character of its founder, also helped BYD to fill in all of those gaps. Because yes, Model 3 is great, Model Y is great, but people want smaller cars, people want more affordable cars, people want more spacious cars than the Model Y, and they don't have a choice, even if they want to buy a Tesla. So, and everything else you mentioned in your previous introduction, that the political troubles that Tesla has Tesla's founder has got itself into, doesn't help. So yes, BYD has done a lot of things right, but if it's not BYD, someone else will beat Tesla eventually.
As I said, BYD is selling very well in China, but it's also doing very well in other parts of the world. We look at sales throughout Asia, Europe, Africa, and Latin America as well. So it's now become a global brand. People recognize BYD when they see one. How important is that, being a global brand?
I think BYD, one thing they did really well was the Euro 2024 or the 2023 Euro Cup sponsorship. I mean, that really announced themselves into Europe. Many people started recognizing it for the very first time at least in the EU. And the global South, Southeast Asia, Latin America, that is China as a car market is technologically more advanced than those markets. So because BYD has such reasonably priced offerings, it's natural that those markets followed what China has been, what models in China has been popular. But the major breakthrough for BYD has been in Europe and recently in the UK, in Australia, the Commonwealth countries, that BYD pushed quite a lot on the branding side. And I believe some of their moves, like the Euro 2024 sponsorship, has been a key enabler for their breakthrough in these kind of developed countries.
So how did China make this technological and marketing leap in such a short space of time? I mean, a lot of money must have been invested in R&D, and China has the engineering talent as well. But what do you see as the main factors that have driven this kind of growth that we're seeing?
Well, how much time do you have? I mean, this could be a 10-hour conversation, and we're still even not scratching the surface. But I think on a fundamental level, quite early on, like we need to count back almost a decade ago when the government recognized that the electric vehicle could be a key industry for the future. So China signed very strategic agreements with countries that does have the rare earth minerals. To be perfectly clear, China has over 80% of the world's processing power of all the rare earth minerals, but China doesn't actually have them. China doesn't dig them out of the ground. China just processes them. And it's because of several very key strategic agreements with those countries very early on. We're talking 2013, 2014 time. And battery is the fundamental component of an EV, and we go from there.
Yeah, you know, we're talking about BYD, but China has something like, well, there's over 100 domestic EV manufacturers in China. How competitive is it in China for these companies?
It is hugely competitive to the point that Chery, which is another Chinese company, also doing great on export market, basically said that they are subsidizing domestic price wars because of the profit they get from overseas markets. So domestically, it's even tougher competition. And overseas export market-wise, it's an easy win for them. So that's where the price competitiveness comes from, is that if you think you are getting a good deal on a Chinese EV in your respective country, they are normally 40% off of your list price in your country if you see the list price MSRP in China. So the cutthroat competition in China is near unhealthy, to the point that the government really stepped in last year and say, you need to stop doing this kind of endless price wars.
Right. Okay, let's talk about self-driving vehicles or autonomous vehicles. Of course, this catches the imagination of many, many people. The Chinese government approved China's first 2 cars with what's known as level 3 autonomous driving capability. That makes a huge leap towards the widespread deployment of this kind of self-driving technology in these cars. Explain to us what that means, and also what it would mean for things like, for instance, autonomous taxi cabs in China.
Autonomous taxi cabs has already been running in China in several cities in restricted areas. So they're doing it step by step. Regarding the level 3 autonomous driving, like the 2 approvals they have given, I would like to point out that level 3 is not the end game. It's not like you can, there's not going to be a steering wheel in a car. It's an evolution towards full autonomous driving, and the key debating point among the industry is that how much responsibility does the manufacturer take when there is an accident, which inevitably will happen. In level 2 and above and lower, it's the driver's responsibility because I am the driver behind that steering wheel. If an emergency situation appears, I'm the one who is supposed to take an action to avoid that accident. If you go level 3, then supposedly in some restricted scenarios, for example, on the highways or in a sort of closed-off industrial estate, industrial park, the vehicle should be able to drive itself regardless of any situations in those restrictive areas. Once we go beyond that into level 4, then we are seriously talking about you can take the steering wheel out of the car. So level 3 is halfway there. It is a critical milestone, but the industry is sort of testing the waters to see how far they can push this and how far the society could accept it, because we are literally talking about changing the employment structure of the society, because if we really reach level 4, then we need to prepare the workforce.
You know, when my colleague Mike Walter was in China, that was about 2 years ago, you took him for a spin in some of these amazing vehicles. As I said, that was 2 years ago. Hopefully, when I come to China, you'll also take me for a spin in some of these vehicles. But
well, no problem.
Okay, but give us an idea of, in those 2 years, in these past 2 years, how the technology has changed.
With Walter, we drove a huge MPV. At the time, it was the cutting-edge model in terms of autonomous driving. So that was about 20 months ago. And since that vehicle, that particular vehicle, has gone through another facelift, and the chip we were driving with Walter was the autonomous driving system was running on an NVIDIA chip. But the later iteration, the current spec, is running an in-house developed chip from that manufacturer. So the hardware stack, the software stack is now completely in-house, and that's just 20 months in one manufacturer. So you can imagine what everyone else has been doing.
Haoran Zhou, thanks so much for being with us.
Thank you for your time.
Chinese electric vehicles are selling more around the world, but here in the United States, the market is going in reverse. Tesla sales dropped and automakers are rethinking their EV strategies. To talk more about that, we welcome journalist Mike Colias. He is automobile industry editor for Reuters and author of the book Inevitable: Inside the Messy, Unstoppable Transition to Electric Vehicles. Mike, great to have you with us.
Yeah, thanks for having me on. Appreciate it.
As I said, there is currently a global shift towards electric vehicles, but here in the United States, there's not much enthusiasm. In fact, one could say that here it's been a case of one step forward, two steps back. I mean, the government has ended EV tax credits, and if you look at automakers, they're focusing more now on hybrid vehicles as well as more fuel-efficient gas vehicles. So given these conditions, do you still think there is a future for electric vehicles in the United States? Is it, as the title of your book suggests, inevitable?
Yeah, well, that title's tougher to see in the U.S. at least right now. We could talk about the rest of the world where it's a much different story, as you alluded to. But you know, I'm hearing a few people call it the EV winter here in the U.S. If you think back 5 or 6 years, there was all this buzz around electric cars. Every car company was lining up to spend tens of billions of dollars on the transition. And you know, I'd say starting around 2023, it started to become clear that they weren't going to get as many people as they expected to buy electric cars. I think there's just still, when you get to that mainstream consumer, too much anxiety around, you know, or am I going to find a place to charge it? You're also, generally, these are higher price cars, and you're asking people to adopt a technology they're not familiar with and pay a higher price. It's, you know, it can be a tough sell. And so, you know, now about a year from ago, we had the Trump administration come in, and that's pretty much upended any momentum that the market still had for EVs. You referenced the $7,500 tax credit. It goes beyond that. There's new rules around fuel economy standards, emission standards. Those have been completely rolled back to the point where it's, you know, you've got the car companies just don't really have a big incentive to put out more EVs here in the U.S. market, and we're down to about a 5 to 6% of the sales are now EVs. We were at 10% before that tax credit went away. Europe's at 25%, China's at 50%. So yeah, right now it looks like a tough sledding for the U.S. EV transition.
And talking about, the change of focus on the part of automakers, I mean, if we look at Tesla, for instance, look, it's dominated sales here in the United States and in Europe as well, with models like the 3 and the Y. They've been bestsellers on both sides of the Atlantic. But now the company has decided to end production of the S and the X, and it has not announced a replacement for that. Instead, Tesla CEO Elon Musk says the focus is going to be on robots and on artificial intelligence. What do you think is behind that?
I think what you're seeing there is Tesla realizes that, the value of the stock market valuation of Tesla is something like 10 times more than the top 6 or 8 automakers in the world combined, right? I mean, it's a huge valuation. Investors aren't invested in that company because it's a car company. I think Tesla knows that, and so that's why they're shifting the story and the strategy toward robo-taxis and, humanoid robots. If you're the rest of the pack, you're still a car company. If you don't have those ambitions, you've got to make this work. And now it's just trying to find the right balance between, okay, how many straight internal combustion vehicles are we going to sell versus hybrids, which are going to be a big part of this story, as you referenced earlier. I think it's still going to be decades of that sort of bridge if we ever do get to mostly or fully electric. So the car companies have to kind of calibrate their strategies now, and I think what you're seeing from Tesla is they're narrowing what was already a narrow vehicle lineup. They only had about 4 models. They just cut that in half. It's really the Y and the 3 now. Mm-hmm. They're still going to sell well because they're the dominant player in EVs, and you're seeing all these competitors pull back some. But Tesla's kind of moving on from being a car company, I think, is the bottom line.
Now, in your book, you showed how hard it is to master the efficiency, the engineering of these EVs. In fact, when the makers of the Mustang, Ford, dismantled the Model 3, they realized how elegant and efficiently that was put together. I mean, how difficult is it for legacy automakers to adapt to this new technology?
I think it's proven very difficult, and you might wonder why that is. It still has a dashboard and axles and 4 doors, and isn't it just a different powertrain? And that's true. But when you get into the supply chain involved with what needs to go into a battery and the minerals and the refining of those minerals, and it's a completely different supply chain. And I think the companies that have had success with this, Tesla being probably the most notable, but many Chinese brands now, Rivian here in the U.S., they started from scratch, and I think that was a big advantage. I think what you've seen largely from the traditional car companies is they tried to start with their internal combustion products and kind of turn them into electrics. That hasn't worked very well. I think a lot of them now are trying that clean sheet approach, but it's been difficult, and they've stumbled out of the gate. And now that they're kind of figuring things out, now you've got this market cool down. You've got the regulatory environment working against you in the U.S. So not the best timing. So I do think that they've struggled at the start of this transition. I think they're starting to figure it out. We'll just see where the demand goes from here.
Right, and looking at supply chains, the Chinese have a distinct advantage, don't they? Because if we look, let's take a company like BYD, for instance. They are one of the biggest manufacturers and exporters in the world right now. I mean, they control the entire process from the mining of lithium to assembling battery packs. Can American companies catch up with that?
I think the short answer is no, not anytime soon. I mean, you can only do that in China, where they have, if most of those raw materials are mined there. If they're not mined there, they're certainly processed there. I think something like 80+% of the key ingredients for batteries, nickel, lithium, cobalt, manganese, all that stuff is primarily refined in China. They've got a number of other advantages too, just the broader automotive supply base there. There has been a lot of government help and support and consistent support along the way to sort of this EV dominant. So I think the estimate is they have a 30 to 35% cost advantage over the rest of the world on putting together an EV, and you're not going to close that gap in a year or two. It's going to take a long time, I think, for the rest of the industry to catch up to their cost advantage. All
right, and somehow here in the United States, the whole transition process from gas-driven vehicles to electric vehicles has become politicized in many ways. You know, we hear President Trump talk about the fact that he believes, for instance, that climate change is a hoax. I mean, the other challenge is that Chinese cars are not sold here in the United States because of that 100% tariff on them, but they are being sold in Mexico, and they will soon be imported by Canada as well. And you hear many analysts say, look, it's not a question of if, it's a question of when they would come to the United States. What's your view on that?
Well, it's not just analysts too. You hear some auto executives talk about that as well. You know, I think most of them would say, if in a private moment, that they don't expect to have to face Chinese competition on American soil anytime soon in the next few years, but they believe long term it's coming. I think they, take the experience that Detroit went through in the 70s and 80s when we saw Japanese and other Asian automakers come into the U.S. and take a lot of market share away from the traditional players. So I think there's some scars from that, and I think that the industry, this is one of the biggest questions in the industry. We've seen the Chinese move into many other markets, including Europe and Latin America, and the global companies are facing that competition there. Everyone's wondering and waiting to see if there's some backdoor into the U.S., either through China, Canada, or maybe the U.S. just rolls out the red carpet. I mean, President Trump has said more than once that if a Chinese automaker wants to come in and build a factory, that he would welcome them because it would bring jobs and investments.
Mike Colias, thanks for joining us, sir.
Thank you for having me.
Chinese electric cars are not yet in the United States, but becoming more and more common around the world. Last month, 1 out of every 10 cars sold in Europe was from a Chinese brand. To talk more about China's drive for international markets, we welcome Moses Nderitu. He is Managing Director of BasiGo, a startup building electric buses in Kenya. Moses, great to have you with us.
Thank you. Nice to be here.
As I said, you work at BasiGo, a company developing electric vehicles in Kenya. And of course, there's a very close connection between the use of electric vehicles and the production of greenhouse gases. Africa doesn't produce much greenhouse gases, but it does suffer from the effects of climate change. How important is it for the continent to make this transition to greener technology, to greener vehicles, and make the investments there?
I think it's vitally important for Africa to make the transition, mainly because, as you said very rightfully, we have suffered the highest brunt of climate change. But over and above that, one thing that Africa has in its arsenal is an abundance of renewable energy. So in a country like Kenya, where we have over 90% of our energy, electricity is renewable, by us transitioning from fossil fuel vehicles to electric vehicles, then we reduce one of our biggest emitters, which is actually public transport or transport. Transport in general in a country like Kenya is equivalent to 40% of all greenhouse gases because we're not a very industrialized nation. So it is extremely vital for Africa to follow that path and take advantage of the renewable energy available in Africa.
Now, your company uses Chinese technology as well as the Chinese supply chain to build these vehicles. What can you tell us about this partnership with China, this kind of synergy that you have with Chinese technology, with Chinese design, as well as with the Chinese supply chain?
I think the main reason we are doing that is, one, it's very affordable compared to the traditional European supply chains that were being used for most of Africa. And secondly, it's very adaptable. So we are able to design vehicles that are fit for purpose for our roads, for our intended use, much easier than trying to adopt what I would say maybe American or European models. So for us, the flexibility and affordability and the dynamic way that the Chinese supply chain works is a big plus and helps us then scale much faster because they're able to make vehicles or design vehicles with us that are fit for purpose and specifically for our type of use.
Now, looking at the data from last month, January, 1 in 10 cars sold in Europe was Chinese built, and I think we can expect that number to increase as trade barriers fall and as the Chinese push for exports as well. I mean, how significant is that, these changes that we're seeing?
I think it's really significant. If you think about it, 10 years ago, you would laugh when you say a Chinese model. Right now, the Chinese vehicle today, they are probably the most technologically advanced vehicles, especially in the passenger segment. So yes, it's extremely significant. We are beginning to see that influx coming into countries like Kenya. There's a big presence in South Africa, a lot of a big presence in the north part in Egypt, and even in the western side in places like Ghana. So we are beginning to move that the new vehicles are not from the original or the traditional markets of Japan is still big because of the link of Toyota and Africa. But however, for new vehicles, we're beginning to see Chinese models coming in, and this is both electric and ICE. So it's very significant, and I think it's going to continue growing. And even places like Kenya, I can predict in the next 5 years, they will be the market leaders for new vehicles.
Right. Now, one of the big challenges for developing countries, of course, is to have the infrastructure so that you would be able to have these electric vehicles running on the roads of the country. Now, China is not only exporting vehicles, it's also investing in building factories as well as infrastructure. We know that it's invested in Thailand, Brazil, Hungary, Turkey, and Mexico. BYD is investing in building a charging network in South Africa. So talk to us about the challenges that developing countries face in rolling out this kind of infrastructure that's needed.
I think the biggest challenge we are finding is one, stability of the grid. So even places where you could actually have land, or you've got the facilities to build the charging infrastructure, that means you might not have a stable grid. Secondly, it's quite expensive because you find that penetration of electricity is not equal in and rural areas. So therefore, building an entire infrastructure for a country is difficult. And then currently, all infrastructure being built in most of Africa is privately owned. So it's been built by the likes of us at BasiGo, who are building infrastructure to support the electric buses and electric vehicles who are putting it to the market. And then there's been no policy for governments to provide either subsidies or land or any support towards that infrastructure. So all the infrastructure being built is 100% private. So, and of course, being private infrastructure, it then follows where profitability would be. So you find it's overly concentrated in the cities and very little out of the city. So if you own an electric car, you may be able to operate within Nairobi very easily. But once you want to leave the city or go to another town or another city, then that infrastructure is not available. But it's growing as the vehicles are coming, and companies like ourselves building that infrastructure beyond the city. But yes, it's quite a challenge.
Moses Nderitu, thanks so much for joining us.
Thank you very much.
And that's where we need to leave it. That's it for this edition of The Heat. I'm Anand Naidu in Washington.